Okay, welcome back, guys. Let's get right into the stock market technical analysis. We're going to go ahead and look at the charts, see what they tell us for the trades here in the near future. So if you guys are finding value, drop me a thumbs up. Let's get into it. Triple Qs, guys. So today, obviously, we gapped up, rallied, pretty much right after that gap. And that's about it. I mean, at the end of the day, we just rallied slightly over that most recent high on the daily chart right there for Triple Qs. There it is right there, closing kind of above that high right there. And we still have negative divergence on the daily chart. So doesn't mean that this divergence can't get burned through. But again, at the end of the day, this is the divergence that's there right now. This tells me that this breakout, and that's what it is. I mean, it is a breakout. It's not very impulsive in terms of breaking above this 311.82 area, but it did close above it. That breakout has a high probability of failing. Does it fail tomorrow? I don't know if it fails tomorrow. I mean, we can continue to rally a little bit, but in general, I think the upside's limited. So just the same as I've been talking about, right through here, I've been talking about the upside being limited. And yeah, we had some more upside today, but I think it's limited. Today we closed another 0.3% higher than those previous closes. So not much, and again, this can continue to kind of grind around and make slightly new higher highs, but I just don't think there's too much more upside. So that is that on the NASDAQ. And let's look at the NASDAQ futures just to make sure that we're kind of on par here. You can see, let me get rid of that one. You can see here, basically, same thing. We're closing kind of at the equal highs right in here and still have that negative divergence. So again, nothing's really changed. Again, the market's just been kind of chopping around. If you look at the NASDAQ futures over the last few days, you can see we rallied up, sold down, rallied up, came down, rallied up. So it's just chopping around, making slightly higher highs while diverging. So I think that the upside is limited here as well. On both of these charts, the one thing I'm really looking for is a bearish PPO crossover. We don't have that quite yet. You'll see here that the PPO is still kind of pointed up. I want to see that start to cross down to help confirm. And then if I go to the triple Qs, you'll notice there, same kind of look. No bearish PPO crossover. So definitely want to see that to help confirm the divergence. Because if we don't get that and we just continue higher, then we will potentially just burn through the divergence and run up and make a new high. Okay. So that is possible. There's obviously, the window's still open for that. I don't think it's likely, but it's definitely possible. So let's keep that in mind. Okay, on the SPY, the S&P 500, you'll notice my daily chart here. I have this downtrend line, and if I kind of extend that out, basically we go right about there. You see on the hourly, kind of tighten it up. You can see all the reactions that we had right through here. All right, resistance, hit it there, and, kind of hit it right there. But again, right there. So running into that downtrend line on resistance on the S&P 500. Okay, so that looks like, oh, and actually let me go back there. You'll also notice there on the hourly, there's some horizontal resistance too, right there. Okay, so SPY to me looks like it closed at resistance. I think it's very likely that it's going to get rejected here. Also, you'll notice that we do have negative divergence on the hourly. Again, not confirmed. So need to see confirmations, which probably would be selling tomorrow, would help confirm that. And then there it is on the daily. Okay, so that is really all I see there on the SPY. On the SPY, we can look at the SPY futures, ES. Okay, looking at the daily, no real divergences here on the daily to tell me that anything's changed. Obviously, here's some resistance right there. I kind of had that marked out, and we closed basically at that resistance level. So I would be looking for selling tomorrow, or if it wants to rally up, maybe sell down in the morning once the market opens up. Okay, let's look at the semiconductors, obviously gapping up and rallying today. But again, technically on the bigger picture daily chart, nothing's actually changed. So you can see we basically rallied up to the resistance point about 438.75 and just closed below that. We still have that negative divergence there on the daily chart. And today is basically just another divergent high. So nothing's technically really changing. The one thing I'm looking for, just want to point it out, if If I roll in, the PPO, looking for that to cross over. You can see right here, it kind of came down, kind of like bounced off of it. It looked like it was going to cross over, but they stepped in and bought it today and it bounced. So, you know, that bounce might carry us a day or two. You know, maybe we just kind of carry for a day or two, grind around. But I do think it's going to cross. I'm looking for that bearish crossover there on the PPO to help confirm this negative divergence on the daily chart. Okay, so still looks fine. And then if I go to like NVIDIA, which has obviously been a big trade idea, you can see here bearish rising wedge pattern there. Kind of broke down. I guess you know, it's not impulsive enough to say we really have a complete breakdown. We still have that negative divergence on the RSI and the PPO. If I zoom in on the PPO, there it is. You know, you can see it looks like it's about to cross, but hasn't quite crossed over yet. So definitely need to see that to help confirm. A little more work to do, I would say. I don't think anything's technically changed across a lot of these short trade ideas. They just need right on the edge. They need that little push, and we'll start getting confirmations on a lot of this stuff. Okay, obviously, I think a big portion of what's kind of going on has been the FANG stocks, but Apple being the largest one. So here's what I got on Apple. All right, this is the bear market. This is the downtrend that Apple's been in on the daily chart. You can see resistance, hit it there again, 3 points. And we're just below it. So if Apple, maybe it wants to push up a little more and hit that resistance. Completely possible. Looks like it wants to. Looks like it's heading in that direction. There's limited upside till you hit that. That's about another 2 7/10 up to 3% up to that trend line. Now, that trend line is very obvious. So when you have something very obvious, maybe the sellers will step in early because obviously it's a very key area to want to short at. And when you have everybody kind of noticing a key area, oftentimes it doesn't hit that. So keep that in mind. And then also on the daily chart, you'll see we still have that negative divergence right there. So we're making higher highs in price from the former highs, but diverging in momentum. These are these are telling me that the next trend, and it's going to be soon, is going to be to the downside. And so again, I think there's limited upside and the potential for a lot more downside. So what I'm looking at is, you know, to the upside, maybe you run up there 3% or so. That's about how much more upside I see here. And then the downside, I think, is very likely next leg lower in the bear market. Okay, now it's not going to get there all at once. Obviously, it's going to work its way down. But again, 3% upside to a potential, you know, 24, 30% downside. That's how I'm viewing this. Risk reward, it makes more sense to want to stay short. Okay, and then someone asked me to cover this one, CVS, as a potential long trade. So I just want to go through it, kind of see what I see. On the daily chart, you have support. It's kind of a range of support from what I can tell, right in this area, and former support right there. And yes, we are definitely right in that area of what should be support. So that is, that's a zone of support for sure. On the daily chart, I don't see any real bullish divergences showing up on the daily. I just see, we're kind of basing out, but no divergences. So to me, I think it would make sense that you'd potentially kind of dip lower and put in some sort of a bullish divergence on the daily chart before actually holding up and rallying. I just don't see that. So that's one thing that kind of keeps me off this trade from a long perspective. On the hourly, yeah, I do see some divergences there on the hourly. You can see it right here. We are, diverging there on the hourly chart. So again, I think that this still needs a little more work to do. Maybe it kind of put in a base, maybe another kind of move down on the daily to start to put in the daily divergences. And then you might actually get a rally out of this. I definitely don't want to be shorting this. On the daily chart, this thing has already fallen from the highs, down to there, 35%. So it's not really a short. It's not set up for a short. We're at support. We just don't have divergences. You don't have to have them, but I prefer to have those, especially on the daily chart, before considering this as a long. And then I'd look for a buy signal after that. So that's my analysis on that. That's all I got, guys, today. So if you're interested in learning this as a skill set, check out my course. Link in the description below. There should be like a little more button next to my description underneath this video. And then also the private member group links in there as well. So catch you guys on the next one. Bye.